All right, this is market update November 2022. Really excited about this one. Anytime that there's any real turmoil in the market, especially when it is, prices um, going down, I really get excited to see how the program responds and how it holds up, and um, really happy with it. It's been what 7 years, and I think we've seen some ups, some downs, and again, I look forward to those ultimate test type situations. All right, let's real quickly go over the um, sectors, and then we'll take a look at what I think is really exciting this past month. So, basic sector, 8% above their 200-day, 25% though above their 50-day, which is huge. And I think that goes again with what I've been saying for the past couple months, which is inflation usually means that prices for basic materials and construction materials increase. That's what inflation is. And so I think we're seeing a catch up in this sector because it has not been performing very well. But as we can see, it's really starting to come back. Still below its historical highs, but definitely having a big resurgence past couple months. All right, telecommunications still probably the worst performing sector right now in the market. Not quite sure exactly what that says about the economy and where we are, but we know that telecommunications is consumer driven, but it is something of a requirement. You know, you almost have to have internet, you almost have to have a phone, but we are starting to see a large slowdown in that area. I remember reading an article just recently about the iPhone sales weren't as expected, and so I imagine that says a lot about what's going to happen now with all of the telecommunications companies that do make money on just the regular month to month billing, which is basically a utility, but they were counting on having that additional money coming in from selling handsets and accessories and all that sort of thing. So definitely starting to see a slowdown there. All right, consumer cyclicals. This is again one of those sectors that when the market is not doing so great, we don't expect this sector to do very well at all. Being that the telecommunications sector is much worse than consumer cyclicals right now, I think says something to what's going on here, right? So 17% of the companies in the cyclical sector are above their 200-day, meaning that historically, right now they're not as bad, meaning they've held up quite a bit. Only 8% above their 50-day, but that's still 83% better than the rest of the market. So consumer cyclicals doing really well right now, despite slowdowns in other parts of the economy. All right, consumer defensive. These are those companies that are going to make money no matter what. Consumers are going to spend with these companies regardless of what's going on in the economy. 14% above their 200-day, only 5% above their 50-day, though. So, again, I think this says a lot about inflation because even though these companies can basically raise their prices kind of whenever they want to because consumers have to purchase these items, I think we're starting to see companies come up against a ceiling that they won't be able to continue raising their prices. So going to definitely keep an eye on that and see kind of where that goes. I think that'll tell us whether or not we're at the top end range of where interest rates can go and where the bottom may be for the market. All right, the energy sector has done fairly well. over the last year. As you can see, 37% of these guys still above their 200-day. That's a historical high, right? Meaning that they're much better off today than they were last year. But none of the companies are above their 50-day, meaning that this sector has obviously cooled quite a bit. We do see, however, though, over the past month, you look at this 8% better than last month. So obviously, there's a lot of ups and downs, but right now, recently, right, they aren't doing very well at all. So probably a lot of profit taking. Whether or not there is any sort of worries about what future prices of oil and energy will be, I don't know. It's hard to say right now, but obviously, like I said, definitely a cooling sector. All right, the financials, which has been a sector that I've been really interested in and really following, because again, typically when you have rising interest rates, that's really good for banks and financial institutions. However, that's also combined with the effect that, if the consumer, if industry is not having such a great time economically, then banks will suffer as well because people aren't taking out as many loans. They aren't spending as much on their debit cards and credit cards. And so I think the financial sector has really been in a real flux, right? 6% above their 200-day, 3% above their 50-day. Both of these numbers are, I would say, far below where the market is. And so while I remain positive on the financial sector, just looking at the numbers, this is not necessarily the best sector to be in right now. All right, health. This has been a huge surprise for me. I don't know what precipitated this. All I know is that hospitals were spending a lot of money on nurses and doctors and this sort of thing during the pandemic. And I think all of those nurses and doctors, all the extra nurses and doctors have now been laid off. And so I think they're making as much money minus a lot of the COVID funding that they were getting. And they're getting back to profitability. Obviously, 165, 200. I've never seen numbers like this before with this particular program. I mean, this is crazy. 200% better than the rest of the market. So the health sector is definitely where it's at right now. I'll say even better than basic materials. Again, I think it's one of those sectors that you will have to spend money no matter what the economy is doing. I mean, things have to get really, really bad before hospitals and doctors are out of work, right? So, prescription medicines, all that sort of thing, is really catching a beer right now. There's a lot of M&A going on as well. Companies buying a bunch of other companies, so that also inflates prices. Yeah, health sector doing really well right now. I'm imagining this will cool off. I don't know how long it's going to take, but no different than the energy sector. I don't expect these numbers to stay this high this long. I do want to say though, with that being said, 165% better than the rest of the market, but that's only 30% above their 200-day. I mean, clearly, we can get 50, 60% above 200-day. 14% above 50-day is 200% better than the rest of the market, but clearly this number can go to 20, 30, 40, 50%. So who knows? Maybe the rest of the market catches up, or maybe this sector continues to go higher and these numbers get up into the 300-400% range. All right, industrials looks just as bad as telecommunications. These are companies that other companies, spend money for, so you're talking about your payroll companies, talking about your waste management companies, all the things that companies need to move forward. And so obviously we're seeing a big slowdown there as well. Real estate. This is a sector that I think can really have a big resurgence. How long it takes to get there, I don't know. But I do think that it will come back pretty quick, pretty easy. Right now, not bad. 5% above 200 day, 5% above 50 day. And so, obviously these guys are doing a bit better than everyone else currently, but not as well as they did a year ago. Technology, this one is surprising. And I have not seen these. This is my first time looking at these numbers. So I did not expect to see this. So we have technology, we have consumer telecommunications, we have industrials that are just on a downward spiral. And so I think any good news anywhere around technology is going to really help everyone else. Again, not sure when that happens. There's a lot of talk about China opening back up and this sort of thing. So we'll have to really wait and see what's going on. But it appears just by looking at these numbers, any movement in the right direction is going to be great for this sector, and I think everyone else as well, including telecommunications, which is dependent a lot on this technology. Our utilities has held up really well throughout this whole, I guess, kind of bear cycle that we've been in. Right now, not doing great. I think that this has a lot more to do with the fact that this sector was doing so well and so has now cooled off quite a bit. But 4% still above their 200 day. So it isn't all bad. Let's take a look at some of the individual performers in these sectors. In utilities, WEC is the sector MVP. Looks like SRE along with ATO are the sector leading performers. We are currently in ENP, a Canadian utility company. Where's it at? Uh-oh, I don't see it. That's a problem. All right, we're obviously gonna have to correct that. Curious to see what kind of effect that has on everything. But either way, technology, Corning, sector leading MVP. Looks like IBM is actually sector leading performer. But I'll throw QCOM and Corning in the bucket with IBM as well. So it looks really good on our behalf. Looks like Hewlett Packard as well. So all of the technology companies that are selling what looks to be more, how do I say this, more consumer related items versus something like Texas Instruments, which is doing more industrial type things like an Oracle or Cisco, right? Intel just has not performed well at all for quite some time, and I see a lot of articles and things talking about Intel because I think the dividend is so large and it's a company that's been around for so long, but it just has not performed well at all since I've been following this thing. So yeah, Corning is where we're at, so we're happy about that. All right, real estate. KIM, sector leading MVP, looks like it's sharing those honors with MPW, which is where we are. As far as the leading DRE, this is not correct. And the reason why is because DRE was bought out by another company. So as you can see here, 0%, 0%. It means no movement in price. And so that they're definitely not the sector leading performer. I think that number goes to WPC and KIM. Yeah, and so that's interesting because KIM is residential. WPC, it's been a while since I looked at it, but I think WPC is commercial. I may be wrong about that, but either way, like I said, I think the real estate industry is real estate sector rather is an interesting place to be. Again, has held up okay, not doing terrible right now. But I think that with rising interest rates, of course, real estate sales are going to cool. But a lot of these companies are also into real estate finance, meaning that they're going to make a lot more money on making those loans for real estate. So really interested to see where that goes. All right, the industrial sector that we know is not doing well at all right now. Looks like the MVPs kind of spread out amongst these guys. So I think because the sector is not doing so great right now, anyone that you pick right now in this sector is going to perform relatively the same. It looks like SWK is one of the outliers that has just horrible performance over the last 12 months, down 7% a month, which that's just burning money. It's just throwing away money month after month. Paychecks is where we are. They're just barely negative. So happy about that. Raytheon is who we got rid of for Paychecks, primarily because the performance of Paychecks was so much better. And so even though Raytheon is doing better right now, I do think that Paychecks is a better long-term hold. But again, we'll just have to wait and see how that plays out. I may actually do a comparison here in a moment just to see kind of where it has been. All right, Pfizer and the healthcare sector. Again, this sector is just doing crazy numbers right now. Sector leading MVP at 1% a month. But the sector leading performer goes to Cardinal Health. And I think that has been the case almost every time I look at these things. Cardinal Health is consistently outperforming everyone else. We're currently in Merck, beating Pfizer, which is always my comparison, because they're so similar to each other, right? And so even though Merck is beating Pfizer in performance, Pfizer, for whatever reason, keeps showing up on the best performing portfolio, and Cardinal Health is consistently beating these guys as far as performance, along with, I think this is Bristol Myers, yeah, Bristol Myers. All right, financial services, just the one I'm really interested in. Let's see. All right, so sector leading MVP is really spread out amongst all these guys. Again, I think that may have something to do with the fact that right now finance is just really in a flux. Obviously, there's a huge difference in the performance, and I think that goes to show just how segregated the financial sector is, because you have, big money banks, which are going to be dealing with a lot of 401k investment type of things, and then you have your regional banks that's pretty much just going to be deposits and checking accounts, and then you have insurance companies that are just taking in premiums, investing the money, and then trying not to pay those claims, right? And so something like a Blackstone, which is at -2.5, I imagine it's going to be very similar to what we see here with CM and probably JP Morgan as well. Let's see, yeah, JP Morgan -2, TD Ameritrade -1. No, I'm sorry, Toronto Dominion is a bank in Canada. Sorry. But then we have insurance. Sun Life is still negative. Citibank, Big Money Bank. Trying to see if I can find any more insurance companies. APO, I think, is an insurance company. So it looks like it's really kind of all over the place. Prudential, there we go. So Prudential doing a little bit better, Allstate better, MetLife much better. And so for me, that's a real issue. You know, if I was someone that was looking at, you know, this Sun Life Financial, why are they performing so horribly when the rest of these insurance companies are performing much better? We're currently in Regis Financial, which is barely negative. Um, Obviously not doing as well as some of the other financial companies, but not doing horrible, not doing as bad as something like a Blackstone or JP Morgan, which, by the way, has outperformed Regions Financial for quite some time. And now Regions Financial is really coming back into their own. All right, energy. MPC just really blew everyone out of the water in this sector. I mean, there are some that are right there with them: Devon, ExxonMobil, Valero. But man, you know, sector leading MVP, Cheniere, same thing, 3%. And you know, the reason why this excites me is because we just looked at the energy sector itself. It's not doing great at all. But the fact that these numbers are still as high as they are just goes to show that comparatively, they aren't doing as well as they have done in the past, but clearly still doing better than the rest of the market. You know, like I said, 37% above the 200 day. I mean, they are just killing it, killing it. So energy, I think, is still a place that money can still be made. Um, oh, okay. See, this is the problem. So E&B is the energy company that we're in. Just fairly positive. Our utility company, uh, my goodness, I forgot that fast. But anyway, obviously our utility company is there. I just don't remember which one it is. All right. I think it's because it's a new company for us. All right, consumer defensive, Walgreens, sector leading. Well, can't say that. The MVP is really spread out amongst these guys, and I think, you know, I think that's just going to be the case for a lot of these sectors right now. Meaning that, you know, there is no clear leader, right? Outside of some of the other sectors that we looked at, but these sectors that have the MVP kind of spread out, it really means that really any one of these guys, with the exception of some, right, are going to perform as well or about average for the sector. And so I imagine that as we see the market change and move, that's going to also change as well. But for right now, kind of like just sit back and watch for a lot of this stuff. So Coca-Cola is where we are. Looks like they are definitely not a sector leading performer, but at least positive, which is different from the rest of the MVPs that we see here. Um, Actually doing a bit better, if not as well as Altria, which is a cigarette company. Coca-Cola, I guess we can kind of look at as a drug, similar to nicotine and cigarettes. So I think that's an interesting comparison. But looking at some of the leading performers, though, ADM is a company that we've seen over and over again. Campbell Soup is where we were, really doing well right now. GIS, SJM, Kroger. So definitely some performers in this sector. Walmart's a company that I always kind of keep an eye on. Barely negative right now. Target down almost 3%. I mean, this Target was like the COVID winner, and they just outperformed everyone over the last maybe, I don't know, year and a half, almost 2 years now. But more recently, though, just not doing great at all. Consumer cyclical. All right, so IPG, sector leading MVP. Sector leading performer is GPC, General Parts, Genuine Parts Company. We tried to get into this company and the price just shot up so high. See this 14%, that we weren't able to get in. And now this company is actually not investable for us because of the stock price, which is why it's not listed as an MVP in any of the last 12 months because we can't invest in it. So the program doesn't even look at it. But yeah, doing really well though. Genuine Parts Company, definitely a stock that definitely want to be in if possible. I think that this company is going to do really well, probably for the next 6 months, just really depending on again what happens with interest rates and this sort of thing. But even if we see unemployment really start to get driven up, I think Genuine Parts Company is still going to perform very well in the environment. Looking at some of the worst performers, Hasbro, Best Buy, and NWL. No, sorry, IP. Yeah. So International Paper. Again, this is going to be all consumer based. Hasbro, consumer based. Best Buy, consumer based. And so what you want to look for in a consumer cyclical sector is you want to look for something that's more defensive than cyclical, right? And so you see things like Yum Brands, right? You see something like a PKG, which is very similar to an IP, with the differences being that PKG is more, it's not as consumer based. International Paper is like the Amazon packaging. So when people aren't shopping at Amazon as much, then International Paper isn't making as many sales. Whereas PKG is doing packaging for anything and everything, and everything has to be packaged. So I think they're going to do well. But Genuine Parts Company is definitely my pick in the sector. Best Buy and Hasbro, these guys will see some good times again. It's hard for me to say that because, Hasbro, with as many trademarks and patents, well, not patents, but as many trademark licenses as they have, it's hard to imagine Hasbro going away. But it doesn't mean that Hasbro can't be bought out, right? Best Buy, again, has really been a stalwart in the retail industry for a long time. And it's hard to imagine something like a Best Buy going away. And you think, well, if Best Buy goes away, who replaces them? Because someone has to replace them, right? We know that there's Walmarts. We know that there's a Targets. And so it's possible. It's possible. I don't think it'll happen in the next 6 months, but it's definitely possible. All right, telecommunications. Lumen has been sector leading MVP for quite some time. The performance is not great, and the rest of the sector is kind of spread out. Lumen is going to be much different than the rest of these guys in that Lumen deals primarily with marketing and advertising, while the rest of these guys are more like phone companies. Rogers is where we are. They're barely negative, and so that puts them up there with sector leading performer Telus, which has outperformed for quite a long time. I'm constantly seeing things about AT&T and Verizon, two big American phone companies. AT&T has a huge dividend, but the performance has just sucked from the beginning. I don't think there's ever been a time that I've looked at AT&T and thought, wow, they're doing great, So definitely not going anywhere near these two companies anytime soon. Much rather stay in Canada. May look into moving into more of a media space as far as marketing and advertisement goes. But for right now, like I said, Rogers, Telus is definitely sector leading performers, and we're happy about that. All right, Basic Materials, which has really done well recently. As you can see, the MVP It's really spread out. Again, that pretty much means that any one of these guys that you pick is going to perform um, as well or the same as the rest of the market, and that can be seen. Look at this. So all negatives, all negative performances, right? But they're on the best performing portfolios currently. SLVM, sector leading performer, but for us anyway, this company is not investable because this company has just come into being. Matter of fact, the only reason why this company is even on this list is because we own shares in it because International Paper spun off or sold off this section of the business, and so now we own shares in it, and that's so why it's here. 6% a month is really well. It's doing really well for us. There's also a dividend for this company, so really happy to own those few shares that we do have, and not going to get rid of them anytime soon. CTRA, FMC, RPM, Southern Copper is where we are. The performance for Southern Copper is more in line with the rest of these guys here. So, you know, not excited about it, but it does let us know that we're right in line with everyone else, right? CTRA, FMC, and these guys are obviously performing much better than the rest of the sector, but that also tells me that these companies are probably doing something a lot different than the rest of these guys. Maybe they aren't necessarily basic materials or construction materials. Maybe they're doing something else. I'm not really sure, honestly. All right, let's take a look now at these portfolio performances. And this is something that I did look at, something that I was really excited about. Whenever there is kind of a sea change, it really gets me excited to see and understand what the market is doing and where it's going. So the up and down portfolio, the alpha up portfolio, and the alpha portfolio are in the top three. We're currently following the standard deviation portfolio, which is still top 5. So I'm really happy about that, willing to kind of stay there, right? But it is important to note that these 3 portfolios have really shot to the top performers in the market. And keep in mind that those alpha portfolios are companies that perform better than the market when the market is performing well, right? And so we know that there has been a lot of variability in the market, a lot of ups and downs. But this is the first time that we're really seeing that bull, brazen stock market bull rush, right? And so that means that we're starting to see a little bit of change. Now, whether or not these numbers stay here over the next couple months will tell us everything we need to know, right? If we're still seeing a lot of ups and downs, then we're kind of still where we are. We haven't gone anywhere, nothing has changed. If, however, this continues to be a trend, if we continue to see these alpha portfolios outperform everyone else over the next 3, 4, 5 months, then we know that we have an actual change in the market. I'll call a bottom, and then we're off to the races, right? So again, these 3 portfolios, these are the numbers with dividends thrown in. So let's look at just straight price performance. And yeah, same 3 portfolios. We got 1 extra added in here. Standard deviation still top 5. So happy with that. But definitely want to take a look at these portfolios and see what's in there to see kind of what's going on. And so I was looking at one earlier. This is the up and down portfolio. And I know that MPC is obviously the one company that has made all the difference for this portfolio. As you can see, the rest of these guys, this is purchase price. I forget what date. I think it's June of 2021. I think. So anyway, this is the purchase price and this is the current price, right? So as you can see, prices are down all over the place, right? Almost no one has made money. PFG, which is, I think is an insurance company, has made some money. We talked about that, right? Um, PSN lost. WEC, it hasn't gone anywhere, right? Pfizer has actually made some money, right? But this MPC is up and way up. And let me tell you something about MPC. I've followed this company for some years now, and MPC is always in the mix when you talk about energy companies that are like shooting through the roof when all the other energy companies are doing well. And so that says a lot about kind of where we are, what the energy sector is doing, and what we can expect to see going forward. I was happy to see that Corning is part of this portfolio. That says everything as to why they are sector leading MVP. Let's take a look at the Alpha portfolio. And I want to go back to and look at kind of the worst performing portfolios, because I think that also says something about where we are. All right. So MPC again, it's because it has that great alpha, but as you saw, it also has those up moves and down moves as well. That puts it in the top tier of this particular portfolio. So again, so any company that you see at the top, that's because this has the highest score for this particular category, right? So this is the highest alpha score of any company in our basket of stocks that we can actually invest in. All right, it has the highest score, and so again, MPC in the energy sector is going to do really well as long as the energy sector is doing well. Conversely, it's going to do really bad when the rest of the sector is doing bad as well. All right, financial services, CG, but again, like you said, it's lost like 50%. KIM, the real estate company, hasn't moved at all. I think that says a lot, right? When the rest of the sector has lost quite a bit, KIM hasn't lost anything. Best Buy lost a lot. KDP, don't know a lot about these guys. Looks like they've made just a little bit. SWK, we saw what the negative performance was for SWK. Look at this, from 208 down to $71. It's a huge loss. Cardinal Health done really well from 57 to 75. PARA lost more than half its value, and then DTE utility stays about the same. So again, with all these losses that we see here, the gains for MPC more than made up for it. And so again, that's why you can't put too much focus or emphasis on current trends, right? You got to really look at those long trends to really understand what's going on. We're not going to make any decisions concerning going after a new portfolio unless there is a sustained trend that has proven itself over time. And even then, it has to be, it's still going to be something that is given a lot of thought to before changing. We're in the standard deviation. Standard deviation is where we're going to stay. Let's take a look now at the down moves, because up moves is anytime there's a lot of buying and selling in a stock. What is the chance that this stock price is going to increase, right? So down moves is when there's a lot of buying and selling of a stock. What are the chances that the stock price is not going to decrease, right? And so for this particular portfolio, it looks like Cheniere Energy, again, that energy name. I think that the energy sector is really what's carrying most of these portfolios. CVS in that healthcare space. We know that Cardinal Health is also another company doing really well there. WC, we've seen them again, really kind of staying stable. KIM again hasn't lost anything, hasn't gone anywhere. So take a look now at the worst performing. See what we get. And so yeah, so this is what I expect, right? So these dividend portfolios, as stock prices come down, the dividend percentage moves up. And so I see a lot of people, a lot of dividend investors that are investing in companies with a large dividend, and they're quick to report and talk about, how many dividends they've collected. But my question is always, well, what about price appreciation, right? What about price depreciation? How much are you losing or gaining on the stock price? Because a large dividend is great, but if the stock price is not performing well, I don't know how great those dividends are necessarily. Um, and then of course we see a lot of beta stuff at kind of at the bottom too, and this has been the case over the last year, I think, which is you cannot bet against this market. And you can talk about government policy, you can talk about um, you know 401ks, you can talk about the increasing size of the investment banks, all propping up stock prices. Every time there is a conversation about what the Fed is going to do concerning interest rates and things like that, the first thing they say is, well, they're not supposed to take into account how their decisions will affect the market. But we all know they do, right? And so what that means is, like many other things, the U.S. government subsidizes and supports the stock market, period. Um, and so even in a time that we see the market losing 25, 30%, you can't bet against it. You cannot bet against it. If you try to bet against this market, you will lose, period. That's in the numbers. And I don't think um, that is going to change anytime soon. Um, there is one outlier here, this up standard deviation, which is interesting because again, you're talking about companies that usually price goes up when there's a lot of buying and selling, um, but but it's also paired with companies that don't move at all. There's a lot of buying and selling, so I think this is one of those. I guess we'll call it a test portfolio. Same thing goes with the equal portfolio. Whenever I see the equal portfolio not performing well, that is a reminder that the program is actually performing the way it's supposed to, because this portfolio is never supposed to be, it's never supposed to perform very well at all. The upper standard deviation, though, that one's a little different. But obviously in this case, it's not performing well at all. Let's take a look at there we go. Um, this is the 50-day and 200-day chart. Back up just a little bit. All right, so this is the 50-day. As you can see, it's been up and down, up and down, up and down, and then we see this huge drop off from August all the way down to November. It has just been down, down, down. And I'm happy about this because I think this means that at some point we will touch a bottom, right? 5% of the companies being above their 50 is the lowest it has been since I've started keeping track of this thing, which is a year so far. And so you know, will it get to zero? I don't know. But at some point, it has to, comparatively speaking, it has to stop and continue to move up. And we're starting to see that in some of the sectors already. I think the 200-day is about the same. This one, though, as you can see, is kind of a slow decline um, all the way down to November with this blip in October, but still a decline, which lets us know that we are definitely for sure in a bear market. This is the thing that I was really interested in. So in October, I talked about this in the last video. We finally met our death cross where the 50-day moves below the 200-day. And so whenever you have this, the death cross, it means bad news. It means that we are legitimately, for sure, no doubt, in a bear market. But again, as we see, even though we're in a bear market, you cannot bet against this market. You cannot go after the companies that perform well when the market is not performing well. Can't do it. And so here's to see how long this lasts, right? Um, Excited also for when this 50-day pushes above the 200-day for the first time, because that is going to be a very interesting thing, because there will be usually a lot of excitement, a lot of buying, a lot of people rushing into the market. And then typically what happens is all the people that were buying at the bottom are then going to sell once that thing gets above the 200-day, and then we're going to see the market come back down, and then maybe we'll have normal days from there on out. But for right now, like I said, we are really starting to form what looks like a bottom. And so, we'll keep an eye out and kind of see where things go. Take a look at our heat map here. All right. And so what we're looking at is lots of green and no red if possible. And right away, I see a lot of red and kind of orange in this thing. Standard deviation is much greener. Just not a lot of red in there. Some oranges, some yellows, but not much red at all. Everywhere else looks like deep dark red. And then some of this stuff is just red all over, like this one, the return alpha. It looks just, I mean, this one is like rare steak. My goodness. And this one doesn't look terrible, just because everything was red that month. That's the alpha up. We saw that one, um, our results. So that one's not bad. Alpha down, not great. Up, down. We know that one is doing fairly well. This one looks weird, just because it's not a, I don't know, it looks weird. I guess it's because there's a lot of red down here, but not so much up there. But yeah, it's not a great looking portfolio. Yeah, just man, like cherry reds, deep dark reds. This one's kind of okay, a little bit, I guess. We talked about the M score portfolio quite a bit over the last maybe 6 months, um, and then just stopped talking about it all of a sudden. So I think that cancels a lot of red. Um, so yeah, I mean, there's no doubt about it. Up down, even though we got this deep dark red there, the rest of the year looks pretty decent. It really does. I'm curious to see what the loss was for standard deviation. See, And this is what the standard deviation portfolio does for you. You know, a month where everything else is losing, 15, 12, 10%. It's only a loss of 4%. So not bad. Um, Take a look at what that portfolio looks like to see how close we are to mimicking it. Last time I looked, I want to say about half our portfolio was there. Let's see. Tullis not there, but I think Rogers Communication is similar enough. Regions Financial is where we are versus CM, which again I think is similar enough. Coca-Cola, we're there. Merck versus Pfizer, we talked about that. So happy with Merck. Utility company, I need to look and see which utility company we're in. I forget. I want to say it's the utility company in Louisiana, ETR. That's what it is, ETR. Not doing great. Let's see. IBM is the technology company. We know that Corning is the sector leading MVP. And even the price performance, not like outstanding. ENB is the energy company that we're in. PPG, we're not there. We're in Southern Copper, but based on this price performance, I think if I substituted Southern Copper for PPG, I bet you this portfolio performs much better. Industrials, we're in Paychex versus Triple M. And again, I bet that if I substituted Paychex with this company, this portfolio performs better. ARE, don't know much about them. We're currently in MPW, which isn't doing great right now. And it's Starbucks for the consumer cyclical. Yeah, genuine parts company outperforms Starbucks, no question about it. But unfortunately, like I said, general parts company is not a company that we can invest in, and that's the reason why it's not involved in this portfolio at all. So yeah, so I'm happy with where we are. There are a few things that I think we can change out at some point, but for the most part, I think we're doing well with the standard deviation portfolio, or at least trying to mimic it anyway. Um, all right, that's it. This is the statistical worst month this portfolio can have. Standard deviation is nowhere near those. Yep, that's where we're expecting to be at the top. And then statistically, this is standard deviation. Yep, the portfolio just doesn't move around a lot, along with a lot of the M score companies. Then as far as the largest, dividend alpha is interesting, but it makes sense though. Talking about those alpha companies, but also throw in a huge dividend. So statistically, you can get 12% in a month. Um, those beta portfolios. And so let me say this too, again, long term cannot bet against this market, but obviously there is money to be made if you can time it right. Meaning that you just somehow find the right company at the right time, get in, get out. That's definitely possible. But as an investment vehicle, something that you can stay in long term, you can't bet against this thing right now. All right, that's it from me to you.